Joining me now with more on the economy, the markets, and of course, the path forward for borrowing costs is Greg Faranello. He's the head of U.S. rates at AmeriVet Securities. Greg, great to have you in studio, and thanks for coming back.
Good morning, Kristen. Thank you for having me.
Yeah.
Very interesting morning, to say the least. So, if you look at CPI recently, better than expected, softer. If you look at PPI this morning, better than expected, softer. But you're also seeing growth come down, I think, at the same time. So retail sales softer. If you move out a little bit further and look at the claims numbers are still saying that the job market is fairly sound here. And that's what the Fed is saying ultimately. So we have softening growth short term. We have softening inflation short term.
Yes.
The question is, going forward over the next couple of months, as we get a better handle on what the tariff situation looks like, do we have softening growth and higher inflation? Where does that potentially put rates in the Fed?
So it is interesting. We have heard time and time again from Jerome Powell in these several years that he's been heading up the Federal Reserve, that he wants to be data dependent, especially in the wake of roaring inflation in 2022. But the read that we got earlier this week, the lowest inflation rate before that takeoff in 2022, we're talking back to 2021, with this new data in hand and a labor market that is holding up, is this data that might justify a June 18th rate cut?
Well, the market's not pricing that, right? I mean, I think what we've done is we priced in May, we priced out May. We priced in June a little bit, now we're pricing June out. So when does the Fed have clarity to feel comfortable coming down? So they're playing it, in my opinion, they're playing it safe. I do think they have room to come down here, but when you look at transitory, you look at 2021, you look at Chair Jerome Powell, he's not going to make a mistake here. So I think the Fed is likely, if anything, to be a little bit late here. They won't be driven entirely by the inflation data, although I think the inflation data has been constructive. They're going to wait and see how this plays out, I think, over the next, at least the next meeting, perhaps two. So we have that June meeting, then we have July, then we have that break. We have a policy review, and Chair Powell is he's going to be talking about that today, and then we have the September meeting. So I think June is probably off the table. July could be on the table, and then we turn to September.
So it is interesting because we've heard from the Fed chair that he sees the soft data, that's the sentiment numbers, right? Obviously noting concern about the path forward. Some inflation reports just by those surveys, like the University of Michigan Consumer Sentiment Report, seen inflation above 4% and higher in some particular cases. But this is the first time the hard data has actually shown us something different. How does he explain that in this next meeting?
So that's a great question. I mean, 100% what you just said, the soft data, the survey data, it's been weak, right? People are hearing about tariffs, but the soft data was weak too, even when the economy, I think, was in a better spot because people were worried about inflation. Now the narrative is it's tariffs and inflation, which we don't really know. The data right now is telling us maybe not. So it's going to take some time. How does he explain that away? I think ultimately the crutch for the Fed here is the employment market. As long as the claims data, as long as the employment numbers stay relatively firm, I think that's what they'll lean on. I think what they've told us, and some of the committee members have been a little bit more expressive than Chair Powell, is if that employment market starts to crack a little bit, if we see the unemployment rate tick up, not a tenth, 0.2, and then we start to accelerate from 4.2 to closer to 5%, I think that's when the Fed is in motion, and they're probably in motion pretty quick.
Yeah. So we're looking at these reports that we mentioned earlier today as isolated reports almost, right? The producer price index, wholesale prices that companies pay, as well as the retail sales data. Clearly they are weak, don't show strong growth, but they are coming after what were pretty decent numbers in March. So do you think this is perhaps a one-off, a response to those higher than expected reciprocal tariffs that the president did announce at the start of April?
It certainly could be. I mean, there's definitely distortions in the data here. Even if you look at the GDP numbers, you look at the imports that are coming in, I mean, there's certainly an element. We had the 90-day pause, and then we had now another 90-day pause. So that rolls us out into September. If you look at what's going on the import side, companies are trying to get goods into the country as quick as they possibly can. I think the question down the road is, will the demand be there? And if that demand is not there, then we're going to slow and stay slow. And ultimately, if this lingers longer than expected, the real risk is to the employment market. But we're not seeing that right now.
Quickly, Greg, before we have to let you go, what does it mean for the U.S. that other central bankers around the world, notably in Europe and elsewhere, have been cutting rates for a while now?
Yeah, it's a good question, right? That is the question. I mean, to me, U.S. rates stick out here a little bit. We look a little too high on a relative basis. But if you look at some of the other economies, China in particular, China is very weak. Europe has been very weak. I think the response there on a monetary side has been pretty clear. It's less so with the consumer here in the U.S. with the Fed.
Greg Faranello, he's head of U.S. rates at AmeriVet Securities, joining me in studio. Greg, thank you.
Thank you, Kristen.
Yep. All right, well, after the break, Lair Hippo debuts a new fund focused on early-stage startups as the NYSE Tech Summit gets underway across the country. Its co-founder and managing partner has those details up next.